Test, test, test. Hello, 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 hello. Hi all, and welcome to another edition of Midday Market Review, live trading and key trading levels for popular markets by TraderCast. My name is Phil, and I'll be your presenter today. So I'm going to say hi all. Just checking that this is all
Hello,
going
hello,
through.
hello, hello.
Okay. Yesterday we had U.S. markets closure, so the markets were a bit quieter than normal in US in particular. So plenty of things to talk about today. So let's start with the normal introduction. My name is Phil. I'll be your presenter today. If you haven't seen me before, this is a little bit about myself. Over the past 10 years, I had the privilege of speaking in front of various different industry events, and I taught many people how to trade. If you're looking for the education, check out My Trading Skills, mytradingskills.com. Plenty of free courses there for you to try and see how we teach. That brings us to disclaimer. What I'm trying to do here is I'm trying to provide you a practical application of what I think a novice trader should be able to do. So there's no complicated strategies here or indicators. It's just a very simple price action, trend following, price pattern recognition type trading, and these are my opinions and experiences, not the advice, since I'll be talking to you about some open positions or some live trades, and if there is anything that's setting up, I'll probably initiate the trade live while we are talking here. So I have one position open. I'm currently short S&P from 37.40. For those of you who watched Friday's event, you know that I was looking at that level as a major resistance, or the area at which I would like to possibly short S&P. And I also have a couple of notes here: trade WTI crude at and trade gold at. I'm actually actively looking at these two setups as well, so crude oil and gold, but if I decide to open anything, or I'll tell you the level at which I'm going to do it, or if you see me do it live in front of you, then I can add all of this and change. But currently just a short S&P as well. So let's start with that first, and then I can go and show you the other stuff that we'll be talking about. There's a very nice setup in DAX, or German 30, if you follow that one. So let me just change this. So this is the current position. Short S&P and 37.40. The stop is at these swing highs here. What I'll really do is I will check out how the US markets open, and then I will fairly quickly decide to either take partial profits or maybe even add to this position if I see a loss of these current lows here. There's a trend line. I'll draw this in a different chart, and I'll show you what I'm seeing. I might be looking to add more to this short with a view to take profits lower. Currently this is the open position and this is a stop. It was triggered by a limit order, so this wasn't at market trade. This was basically a limit order that was triggered, and all I want to do is I want to move the stop at break even at the moment, and to protect myself just in case if we see a nice spike at the open. I want to be sure that I walk away with as little of risk as possible. But that's where I am with this trade at the moment. So happy to hold it short, and I'll explain the reasons why in a bit. There's also a very nice setup in DAX in 4 hourly as a swing type trade. This is a setup here in gold that I'm paying attention to, and I'm definitely paying attention to crude oil. I'll show you all of that as well. So this area here is definitely of interest. I'll talk to you about all of that in more detail shortly. Now, first things first, top 5 things we should know before we start trading today. Recession fears. We have Musk was sharing his views, and the new MLIV Pulse survey is live. Elon Musk, Nouriel Roubini, he was known as a Dr. Doom for some of you who've been trading for a while, and Goldman Sachs Group Incorporated are all warning of the growing risk of recession in the US, even though economists are estimating a less than 1 in 3 chance of the occurrence this year. Meanwhile, President Joe Biden was weighed in on the debate, saying that contraction isn't inevitable, following a conversation with former Treasury Secretary Lawrence Summers. Musk, speaking at the world speaking of the world's richest man, Tesla Incorporated CEO Elon Musk, he spoke to Bloomberg editor-in-chief at the Qatar Economic Forum. He said that he didn't see any problems balancing Tesla's interest in China with his pursuit of Twitter. With regards to Twitter, Musk said there were still a few unresolved matters, and added that he wanted to put the takeover on hold while he's investigating how many users of the macro blogging site are real people. On cryptocurrencies, he reiterated his support for bit of a joke token Dogecoin, and finally on Tesla he said that supply constraints were the biggest brake on growth, and that the current round of job cuts at the company would lead to 3.5% reduction in overall headcount. Second half, that's another kind of topic of this Bloomberg report. How will the second half of this year play out for major asset classes? Markets Live is rerunning its 2022 asset survey, which is a Bloomberg survey from December, and they want to see how the street views have evolved amid the turmoil and volatility in the past few months. Participation takes 1 minute, and it's quite anonymous, so loads of people are asked to kind of go in and submit their views. These will be the views on S&P 500, on fixed income like 10-year treasury yields, and other major markets including energy and precious metals as well. And that's it. So far we are seeing a little bit of a green day. A little bit of a green day. Let me just see, where is my gold? Okay, nearly there. So it's a positive day for risk assets. Equities in Europe extended gains, with most indices rallying 1%. S&P and Nasdaq were higher, but I'm happy with my short on S&P. Variety of comments from European Central Bank speakers throughout the European morning. The dollar traded quite steadily, I suppose. It was lagging against major G10 currencies, except Japanese yen, which is weaker than dollar, and you can see dollar yen moving higher. Crude futures are looking to push higher as well. Gold was steady near 1837. Bitcoin rose back above 21,000, so that's a big one that everybody's talking about. Okay, cool. Now, If you need something covered, let me know. I'll be more than happy to do so. But I'm going to go into a few markets now and check. In the community, I've already posted the week ahead analysis with the important key economic data releases which are relevant for us this year. We don't have any central banks this week. But there is lots of central bank speakers from ECB, from Bank of England, and also Fed. Fed's chair Powell is due to testify in front of the House panel on Thursday. But other than that, I'm not seeing anything that could be really like a major point of interest from the economic calendar. Today, yeah, nothing. Home sales at 3 o'clock. Fed's barking is due to speak. Master is speaking, and that's it. Pretty much nothing else. UK inflation will come out on Tuesday, so that's going to be quite topical. I was just speaking to some colleagues and friends in UK, and they're all saying that banks are hiking their mortgage rates, and they were actually pulling all the deals even ahead of Bank of England rate decision. Finding it kind of challenging there as well. So, but anyway, so more issues that could possibly cause volatility in sterling currency crosses, and then also UK equities like FTSE 100 and so on. So that's where we are with the economic calendar. Very little today of interest. Now let me just talk to you about those couple of setups that I was mentioning. So the first one was with S&P, and then I'll show you DAX, and then we can talk about gold and oil, and then we can talk about some of the other stuff as well. So this is the premise for the short sell. So there was no broadcast yesterday because US markets were closed, but this was based off the analysis that I did on Friday. So on Friday we were looking at these areas up here as a resistance, and at that time this is where the market was. So market was kind of creating this rising wedge, and for those of you who watched the broadcast, you remember I was looking for an oversold bounce back, basically a short squeeze and then a sell-off. Well, that didn't happen on Friday. On Friday we saw a reversal, loss of this rising wedge, and let me just show you that. So on Friday this is what happened: loss, a retest, and off we go lower. So that was basically a bearish reaction, but the level still held, so the level was still important, and it's this level up here. So all of this now morphed into something that looks like a larger rising wedge. This is what it looks like at the moment. I can also do this, and then I can also do this. So drawing these trend lines, it's always unique to each analyst or person who's drawing them. There is no right or way. Well, there is a right way of drawing them. You need a multiple touches, at least 3, to draw a trend line, but different people might see this in a slightly different way. But this is what I'm seeing. I'm seeing this as a rising wedge, and they have the tendency to do stuff like this. They have the tendency to break to the downside, and then possibly have a little retest from underneath, and then you see another leg lower like that. And this leg lower is normally based off the widest point of this consolidation, so this many points to the downside. So that's the premise, and that will give us the kind of symmetrical move. More speculative traders who are more bearish would take the distance from the previous consolidation, so therefore all of this was consolidation. There was the rising wedge which was lost, and they would add this many points at the point of breakout. So either way, it looks to be bearish, assuming that the price dips and stays below these clusters of the lows here. So there is a low here, there is a low here, high, high. So support, support, resistance, resistance. There is another resistance, resistance, a breakout, support, and now it's coming to be support again. So dip lower, a red candle closing below 37.20 could possibly incentivize me to add to my short position. I've entered up here, and this was based on that multiple layers of evidence. I don't want to repeat it again, but for those of you who watched Fridays, you know the significance of what I've just done. This is a fib retracement. You can see this is 61.8 fib. Yeah, I can also change the time frame and show you this as a horizontal, and then we also have a trend line as well. So we did the same analysis for 3 or 4 different markets on Friday, and hopefully you're learning from that. Hopefully you're learning from that and you're finding it useful. So that's where I am with S&P, and this is the reason why I've decided to go short. I will very quickly change my position if I see a breakout to the upside and push through these highs. A daily close above 37.48, 37.50 would change my outlook, and then this will become something different. But so far I am happy to hold it and staying with this position. So I can see there's few people coming in. So hi all. You guys trading anything? So let me just show you where I am with my position again, and then I can move on to DAX. Cahill, Caraldo was talking about it last week. So so that's the entry. The stop is at break even at the moment. There is a larger rising wedge. I would like to see a push lower, loss of these lows here, in particular 37.20, 37.20, 37.18. So there's a zone of about a couple of points and a flush lower. That's what I would like to see. Will I get it? I don't know, but at least I'm in this position at the moment. Now the next thing that hi Norman, trading Indian, hi, welcome guys. Sorry. Now, the other thing that I want to talk to you, sorry, I was just reading a message from somebody. I thought it was a breaking news. It's geopolitical news rather than market specific news. This is the same or similar setup in the DAX, or German 40 index. Now, from a trend point of view, we have a clearly defined downtrending market. This is oversold bounce back, and the price came into this zone here. So multiple layers of evidence, previous lows. Okay, let me just show you. So previous lows, previous lows, previous lows. Okay, all fairly straightforward. So we have horizontal. We also have a trend line of sort. We also have a fib retracement from swing high to swing low, 61.8. And then we also have a pattern, which is a rising wedge. You can call it like that. It's not exactly rising wedge because they normally have like a coiling price action. They tend to look like this, so they're like wider here and narrower there, but they have the tendency to do something like this: dip below, retest, and then off they go lower. They normally break in the direction of the prevailing trend, which is in our case to the downside. So that's the basic premise. I don't have anything open on DAX because I already have open S&P short with the same setup, so I'm not doubling on my position here, but I'll pay attention to it, and I'll see if anything changes. I might go for a little scalp here into the close. European markets close, not US. But that's where I am with the DAX. I think we talked about this on Friday, so this setup is still very good. So key trading level on the upside is at 13,360. That's our point of control, all the way up to 13,400. So this zone here is definitely of interest. So if the price rallies from here and then we see another rejection to the downside, that's okay. If we see a loss of these lows and then retest from underneath and then another leg lower like that, that's also okay for shorts. The only alternative which would negate the bearish outlook would be breakout and then a retest from above and a daily close above here, 13,400. Then that would change the setup, and then this will become something different, and the price could then possibly carry on moving for another couple of 100 points. So anybody who is in this position would not really want to carry that amount of risk unnecessary, because then it's no longer a valid setup for this particular trade entry. But that's where we are with the DAX. I'm going to minimize that now and go and check out crude and gold. Hi Samuel. Crude oil setup, yes. So just to kind of clarify something, this is what I was talking about at the beginning. These are my open trades, if you want to call them like that. I only have one open trade, sorry. That's probably better for you. I have one open trade, which is short S&P currently. My stop is at break even, so I'm fine with that. I have trade WTI crude and I have trade gold at. So I was saying that I'm looking at these and I will likely try and find a trading setup. It looked like a possible trade setup for me. So let's talk about crude oil because Samuel is asking about it first. So crude oil, we have a dip lower and now this consolidation here. I was looking for an oversold rally. So this is a daily chart. You can see that there is a nice hammer formation here. And the price came from low to high to full 61.8. All of this became a falling wedge like that, and they have the tendency to do something like this. They have the tendency to break to the upside, which is basically the opposite of what a rising wedge does. So they have the tendency to break, retest, and then off they go higher. Now this area here is of interest for a number of different reasons. So we have clusters of these previous lows. So high, high, low, low. There's a wick through here, then another low, and another low, and then another low, and then we have this hammer here as well. So fairly significant level, 108 on this particular chart. Yet again, your broker might have a slightly different price, but that's where I am. Now, if this is lost, then price could very quickly dip lower towards 105, 104.80, and so on. Resistance on the upside is towards these highs here now. So this is where the point of interest is. So high, 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 breakout, retest, and then all of that. So that's where the resistance is at the moment, at 114 halves, 115. So I'm looking for a bullish setup here. From a longer term point of view. Longer term meaning daily. So 4 hourly, this is also looking like a potentially oversold bounce back. So in 4 hourly, I would like to see if this holds. In 1 hourly, I would like to see if this holds and we see a rally from here and a push higher. So I would like to see if we can can do that, sorry. If the price can bounce off here and rally towards this area here, where the price will then meet this falling resistance trend line. A couple of ways to potentially enter from the shorter term point of view. This would be buying the dip, buying the support. I don't have anything open. This is a 15-minute time frame chart, so there is a pullback and nice reversal here. There was a little bit of a pullback, didn't come as close to this line, but something like this, something like this, something like this. Let's see how this candle finishes. We might get an entry, but as close to 110 or slightly lower as possible for another push higher. Stop in my case would be very, very tight, just below this rising trend line. So if I'm wrong, I want to be stopped out very quickly, possibly giving a 50 or maybe 100 points of risk. So yet again, I'm pretty sure that you've managed to go through the risk management course, or you understand how to manage your risk 1% of your trading capital or less. So if this 100 points, that could be $10 for somebody, it could be $100 for somebody else, it could be $1,000 for somebody else, depending on the size of your account. But make sure that you're risking very, very little, and protect your trading capital at all times. Use the stop losses and so on. But that's what I would like to do. I would like to see if I can get in. The other option would be a rally and a breakout above these highs here. So that would also pique my interest if I see a breakout of that. So breakout of these highs and a candle closing above would also trigger my interest for a breakout, retest, and a push higher. But currently I have nothing open on crude oil, nothing open. We are at the open for US markets, and I'll show you what's happening with US equities. This is S&P. Oops. It's rallying straight away, or it's attempting to rally. It's attempting to rally. I'm still happy to hold my short. If I get stopped out, my stop is at break even. So that's my stop is at break even now. So if I get stopped out, I'll walk away with nothing. But I'm holding it. I might re-enter again. I'll see. Hello, hello, hi all, and welcome to another edition. Sorry, I just clicked on that bloody channel here.
Player refreshed.
There's very little to report here. Oh, my S&P, I'm gonna get stopped out now. Came very, very close to it. I think I'm gonna get stopped out on this one. It's going to be one of those stupid trades. Why did I move my stop loss? I should have kept it where it was. Should have, could have, would have. Probably. Or I should have taken partial profits. Why didn't I do it this time around? Move the stop loss below. Look, I could have made money. I know. Let's see. Let's see. I've made my decision. That's what I'm doing. I feel that I'm not carrying any risk, so I'm gonna let it settle and see what it does. Hi, Chris. Chris, welcome. Welcome, Chris. I don't know how you find this, how you found the channel, but, and if any of this is making sense to you, but it's not really complicated. It's just once you get used to the terminology and other stuff, it's fairly straightforward. Now, this is really bad. Now look, here we go. Nasdaq is really pushing higher. Dow is pushing lower, and also DAX that trade on German 40 is breaking to the downside. So this is the first 15-minute candle that's trying to break through support. A bit of a kind of a freaky market situation here. So Nasdaq and S&P are pushing higher, and did I get stopped out? Yes, I'm out of my trade. So let me show you guys. I am out of my trade. I got stopped out. There's nothing open. There's nothing open now. I'll update the sheet straight away. But yeah, it's a strange one. Gold is pushing lower, and crude oil is attempting to go higher. So let's see. So the first thing I'm going to do is I'm going to say, here we go, closed at, so we're going to stop loss break even. Sorry, I'll do break even, stop loss. But because I didn't make anything, I didn't lose anything, I'm gonna shade is kind of neutral green. So that's where I am with my trade. I want to see if there's anything else possibly ticking along. The other stuff that could be of interest, Biden, no move Biden on Chinese tariffs likely before G7 meeting. Goldman warns US recession risk now higher and more front-loaded. Deutsche Bank CEO, likelihood of a recession in Europe is quite high. ECB sees technical recession in some Eurozone nations already. All doom and gloom. Bank of England chief economist Phil would sacrifice growth to cut inflation. Reserve Bank of Australia law sees key rate rising up to 50 basis points in July. Oil prices high on supply and demand fundamentals. US futures signal relief rally as contracts bounce with EU stocks. Okay, so nothing really of interest here. Now, Nasdaq is definitely pushing higher. Dow and then S&P as well. So that short setup was short-lived so far. Short-lived so far. So let's see how this plays out. The other thing that I was mentioning to you was a possible trade setup in gold. And gold is downtrending here in a longer term time frame. So daily is downtrending high, lower, high, lower, high. There is a selling pressure. Yet again, for those of you who watched Friday's session, the same analysis applied for Dow, S&P, gold. I think we had one more market as well. This was the major resistance at 1870. I don't want to repeat the same thing over and over again. This appears to be a consolidation here. We have low, higher low, higher low. So all of that. And gold should really start rallying from here, from this area, and break to the upside. If it is to do that, okay, it needs to rally from here, break to the upside. So do something like this, break to the upside, resistance, 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 breakout, retest, and then the price could possibly make an attempt to go higher. And then this is the area where other traders might be looking to short sell it again. Anybody who's long would likely take profits around 1865, 1870, 1875 if they can get it. It's a basic premise. That's the basic premise. But so far there is no setup. The price did not break higher. And if I was to trade this setup now, I would be front running the entry. So I'm basically trying to pick the bottom. And what might happen is the price could look tempting, and then the price does something like this. It reverses, loses this support, creates a retest from underneath, and then all of this looks like a loss of support, and then a price does another leg lower. So the confirmation for me would be a breakout above here, above 1837, 1840, and a close above that level. So something like that. Something like that. So let's see. So key trading level 1835, major support at 1830 to the downside down here. Loss of 1830 could possibly open the way for the retest of the lows down here towards 1820. Upside is capped by 1865, 1870, 1875 for gold. That's where I am with gold, but no setup for gold currently. Are you looking for anything else, guys?
Some emerging market news here as a Reuters poll shows that all 27 economists polled expect the Bank of Mexico to hike its key interest rates by 75 base points to 7.75% on Thursday.
US stocks get off to a good start to the trading week. Yeah, markets were closed yesterday. This is the first trading day. Crypto fears now materializing. Central banks.
Looking to some political news within Europe, and a French minister here, AFP citing, noting a total consensus has been reached in the EU on making Ukraine a candidate.
Cryptocurrency, let's just check that one for Bitcoin, about 4.8% up on a day, 21,400-ish. So that's encouraging. That's encouraging. Because there was a fairly decent corrective move in Bitcoin there as well. That preceded the market, equity markets move lower as well. And it was apparently reaction to what central banks did with the interest rates as well. Guys, we've been broadcasting for about 45 minutes, 50 minutes already. I've covered a few things. If you want me to cover anything else, we didn't talk about any currencies at the moment because they're just going sideways here. This is cable, this is euro dollar. Dollar yen looks like it's breaking out slightly higher. Euro sterling going sideways, very close to 86. So sterling weakness, euro strength. Apart from that, all action is in Nasdaq. Okay, S&P as well, but first 15 minutes, this is the first 15-minute candle of the trading day. Imagine if the price starts reversing now and starts plummeting. I would say, what a muppet, what a muppet were you to move your stop loss at break even. Look what it never stops. It never stops. Keep your powder dry. There'll always be another trade. Wait for a market to come to you. What about, somebody is saying, what about dollar yen? I'm waiting to master one or two markets. I've been watching a group that doesn't live trade simulated. Their margins are way too rich for market. Okay, well, Chris, welcome. Hopefully you're finding this useful. Hopefully you're finding this useful. Samuel is saying, thanks for crude oil. What about dollar yen? So let's talk about dollar yen very quickly, and then we can check some of this other stuff as well. We talked about dollar yen ahead of Bank of Japan. There was a divergence there as well, but obviously we are not showing any indicators here. And this looks very one-sided. So US dollar strength and Japanese yen weakness. The fundamental reason for this is that Federal Reserve keeps hiking rates. They are battling rising inflation, and the only way they can control the overheating economy and rising prices is by hiking interest rates, and they did a big hike in the last meeting. Although in the press conference that followed, they've set the expectations that we shouldn't get used to this level of hiking as a norm, but they were reacting to that higher inflation reading they got, and that's why they did it. So that was the premise for it. So basically you have one central bank which is quite hawkish, going through a monetary policy tightening. In this case, that's Federal Reserve, which is relevant to US dollar. On the other hand, you have Bank of Japan, which was very accommodative, and they are happy with weaker yen. and they are not hiking rates. And even in their statement after rate decision, which was basically a non-event, they said, don't feel that anybody could pressure us into doing anything. We are doing our own thing. We are at the levels that we are comfortable with, and that's it. So if you have that type of scenario, so one bank hiking rates, the other bank being accommodative, it's only one-sided trade. That means that the central bank, which is hiking rates, and in this case Federal Reserve, which is impacting US dollar, would cause US dollar to strengthen against the other central bank, which is not doing the same thing or doing the opposite. So this is US dollar strength and Japanese yen weakness. Now, how far can this go? Well, let me show you. This is the monthly chart. So we are really high. There is look, this is 2002, 2006, 2014. So the price is breaking through all of these previous highs. So it's exuberant levels. Now, nothing goes up forever. So now some newer people who are watching this say, oh, that means you're going to short. No, it doesn't mean I'm going to short. It means that I'm aware that this is becoming exuberant. Nothing goes up with this steep rises, this vertical push higher forever. This is a normal market behavior. Up, down, up, down, up, down. A nice angle of this chart. This is not. This is exuberant. But it's powerful because it's showing us that this is triggered by central banks, and this is what they're doing. So how far can this go? Your guess is as good as mine. What would you do with this? As a disciplined trader, you can only do one thing, and that one thing is you have to wait for a pullback to buy. So where is that pullback? Well, that pullback could be twofold. So the pullback can be to this previous consolidation here.
10 minutes away now to the top of the hour, so with the US existing home sales release for May, 5.4 million expected versus a par rating of 5.61 million, with Reuters seeing a range of 5.2 million to 5.61 million for the month-to-month figure, minus 3.7% expected versus a par drop of 2.4% last month. Looking as well to last month's breakdown as well.
So the pullback
We saw that the April national median home price for existing homes was $391,200. That was a gain of 14.8% from the April 2021 period.
Pullback to support, rising trend line, also cluster of the previous consolidation. So this zone here, 134 halves, 134 half, 133 half. So that zone here would be of interest. From the intraday point of view, you can do this in a shorter term time frame. You can check this out in a 4-hourly. In a 4-hourly, you might have a slightly different trend line. You might have a trend line that looks like this. Okay, so then in that case, we are looking for a pullback to 134.50, 135 for a rally. The only thing that we can trade this is if at some point we see a pullback and then a reversal, corrective pullback and then a reversal, or a breakout to the upside and a push higher. In this case breakout did not carry on to the upside. We had a breakout, which was a false breakout, and then a price reversed and eventually picked up and went up higher. So to give you the analysis for dollar yen, point of control is at 134 half, 133 half zone. Bullish. Okay, alternative. That's it. Hopefully this is helping, guys. Hopefully this is helping. Gold is coming fairly close to that breakout level. This looks tempting. Okay, guys, just realized the time. We've done quite a bit today. Yet again, I'll be back with you tomorrow. Usual time. I'm starting at 2 o'clock UK time, which is about 53 minutes ago. 53 minutes ago. So I would normally start at 2 o'clock, or just shortly after 2. I'll be back with you tomorrow. So in the meantime, stay safe, happy trading, and I'll speak to you all soon. Thank you for watching. Thank you for listening. Thanks, guys.